and welcome. You're watching Closing Trades on ET Now. I'm Anisha Jain with Saisha Faridi, and for now the tables have completely turned because from that record level and that smooth sailing above the 22,750 mark, we have completely given up most of its gains. In fact, at one point of time, we were down almost 150 points from the highs. From there has been a bit of recovery, but nonetheless, there is a sharp fall that the market is actually dealing with. It's a sharper cut if you're looking at the mid-cap space because that index was down almost 400 points from the day's highest point. So a bit of pressure there, though the small cap index is holding out quite okay, and that's been actually doing quite well for what 10 to 11 sessions on a trot. So small cap index really holding out. In terms of specific names, it was Reliance Industries that was coming under a bit of pressure. You also had TCS putting its foot down and batting for the bears today. So that stock was also down in the trading session the last time I checked. And then a couple of auto names were also under pressure. Sector speaking, what's clearly standing out today is metals and real estate. So metal was shining away in the trading session. The likes of Hindustan Copper, Hindustan Zinc, etc. were doing quite well, and the real estate pack, whether it was the Sobha, Godrej Properties, even other names from the broader markets, they were holding out quite okay. So there's still some pocket of green, Aisha, but clearly we have given up the gain that we started the trading session with.
Oh yeah, absolutely. Still down 100 points off from the day's highs. While there is coal in Hero Motorcorp, Reliance, which is down 1.25%. The money names not really participating in today's move. Technology is a little abated, and even L&T, which has come off quite significantly from the top of the day, that's also lying mildly soft as we speak right now. There's of course HDFC Bank too, which after its powered or rather very powerful move all through last week, that also is a little straight in today's trading session around that 1547 odd level as we speak. But yes, ICICI Bank is making up for that. 2% higher on ICICI Bank as we speak right now. Apollo Hospitals, Infosys, Eicher, JSW Steel, they're all looking good. From within the broader market, the metals names continue to hold a buzz. So Hindustan Copper still doing good by about 8.5%. Godrej Properties, after its Q4 updates and the fact that they've already managed to beat their guidance, that stock is still going by 4.5% as well. As we speak right now, Vedanta, SBI Cards are some of the other buzzers in trade as we speak right now. There's also Ajmera Realty. They spoke with us earlier today. The Q4 sales volumes have been quite robust, about 104% uptick is what they've seen. The collections as well have seen an uptick of 91%. And then of course there's Sterlite Tech, Shilpa Medicare, all a buzz over the fundraise. QIP for Shilpa, or rather QIP for both Sterlite Tech as well as Shilpa Medicare. Exide, and after all that buzz that you had around the counter yesterday, JP Morgan has come out with a recent note. They're maintaining their overweight stance, target price of 480 on Exide now, and this that they've hiked the valuation for Exide's EV battery business now to 163 rupees per share. 384 is where that stock is currently in trade. A lot of upgrades as well for a Canfin Homes, for an Infosys, which we'll discuss in the due course of the show. But let me welcome on board our experts. We've got Kunal Batra joining in, Shivani Sarkar Kurian as well on the show right now, and CA Rudramurthy too. But Kunal, what do you make of this ease off that we are seeing from the top? The fact that we were at that 22,750 level, from there it's a good 100 points now and 150 at the session lows.
Yeah, I would call it a bit of a consolidation. Nothing much in terms of trend change, major signals, no major signs emerging from the change in the texture of open interest, the indices, both the Nifty and the Bank Nifty. Yes, the mixture has been a bit off in terms of the market, internals, where you've seen for a change industries actually showing signs of correction. Then you've seen PSU banks also, the likes of SBI, etc., showing signs of correction. But on the other hand, you've seen ICICI Bank moving up quite, then emerging as a potential breakout candidate for the 1115, 1120 mark, which has been a huge resistance zone for the stock price. So I probably keep it this way, that the last 5-6 days we've been making pattern of higher lows and higher highs for the indices. Until the time we continue to do that and respect the previous supports for the index, the assumption is that the trend would continue on the upside.
Let me take it across to CA Rudramurthy as well. Rudra, two stocks, Reliance as well as HDFC Bank, which were the leadership names all through last week and as of yesterday as well. What do you see on the charts there? You think the consolidation is here to stay for some days?
For me, definitely market is now giving that consolidation after a huge 1,000-point move, both on Nifty, which we have seen from levels of around those 21,800 to levels now at around 22,800. And similarly, Bank Nifty has also seen a good move of about 2,500-3,000 points. Now, this is just a consolidation phase and one has to definitely buy this dip. And specifically, if I have to talk on Reliance, yes, it has strong support and every dips to levels closer to 2,900, and even at current market price for me, Reliance is a buy. And once it crosses that all-time highs nearer to that levels of around 3,000, 3,020, you will see a big momentum move on Reliance, and I won't be surprised to see that stock moving till 3,200. And similar patterns are seen in HDFC Bank. Yes, it has made a very, very strong bottom formation now at around 1,400, 1,420 levels. And having made that bottom formation, it has given a very swift move to levels closer to 1,550, and currently it is consolidating at this range. So I feel a move towards 1,600 is possible, and then we will see another further leg of up move towards 1,650 level on HDFC Bank. So I am bullish on both Reliance and HDFC Bank. Every dip has to be used as buy opportunity. Use this consolidation to buy stocks which are right, and this up move is yet to stay.
Okay, point taken. So that's the view coming in at the index level. What kind of moves we're witnessing right now? But Shibani Sarkar Courier also with us on the show. Shibani, what do you think of the cool off that we are seeing? Because at one hand you have people talking about how we are likely to see big rally ahead of elections, and then of course the other camp believes the valuations are a bit perky right now, above the 5-year averages, and it will all depend on the direction that we get from the earnings season now.
Hi, good afternoon. So after the great run-up that we have seen in the market over the last year and a half, some degree of volatility is to be expected, and that's something that we will have to contend with. However, if you look at, from a market perspective, the ingredients that have driven the rally still remain fairly intact. So the trinity of macro stability in terms of GDP growth, where India remains among the fastest growing large economies of the world over the next 5-year period. Second is corporate earnings delivery has been fairly stable and robust, and the expectation as we go into the quarterly earnings season is that earnings delivery and even consensus earnings estimates remain fairly intact. So that part also is what is driving markets. And the third aspect has been flows, specifically, of course, domestic flows and even the FII participation, which has come back in the month of March. So from the ingredients perspective for the market, those ingredients are pretty much intact. However, obviously we have to keep in mind valuation. Our belief has been that in terms of valuations, reward at this point in time is favorable for large caps, which will be the mid and small caps. If you look at the large caps, the Nifty is trading at about a 5% premium to its historic average multiples, while the mid caps are trading at about 20-21% premium, and small caps are trading at about 20-26% premium to their historic average multiples. Perspective, if you look at purely on valuations, near-term risk reward does seem to be in favor of large caps, and that's been our view, and that's something that we continue to believe.
Okay, that's the take coming in the index and what lies ahead. But let's take a look at the CD ratio, or the credit deposit ratio of banks currently, which are at a decadal high, is what our observation has been. In fact, my colleague Astha Chopra joins in with more of an analysis on the trends that she's picking up on this.
Well, the CD ratio of bank increase, which is the credit deposit ratio for the banks, it increased and touched a 10-year high with 38 basis point. It rises to 38 basis points and reaches to 80.3% as of March 2024. The ratio, the CD ratio, which is 80.3%, it includes the merger impact of HDFC and HDFC Bank as well. Talking about the deposits of the bank also expands 13.5% and it reaches to 204.8 lakh crores as of March 2024. Advances of the bank, the credit of the bank also increases by 20.2% and it reaches to 164.3 lakh crore as of March 22, 2024 as well. This issue was raised by the RBI governor also as well on the Friday, and he said that the bank has to clear the correlation between the credit and the deposit growth. This was also said by the RBI governor that the bank should avoid any exuberance and in lending and adopt the measures to maintain the balance between the credit and the deposit so that the growth is substantial and the measure and the difference between the credit growth and the deposit growth is maintained.
Thanks, Asta, for that. In the meantime, take a look at the stock of Bharat Electronics. That one is surging away in the trading session. So keep an eye out. Perhaps there's some more wind which is brewing, or perhaps some sort of announcement that Street is expecting, because that stock has managed to work up. And you also have IFL Finance inching higher. Castrol India too has actually managed to run up 9%. It's not usually a stock which moves with that kind of big, turnaround, but looks like there's a 9% move on Castrol as well. And then you have Motilal Oswal, Anand Rathi Wealth, some of the other names which are doing quite well. Now to slip into a very short break, but don't go anywhere. Lots lined up when we come back.
With closing trades right here in ET now, let's just take stock of what else is looking up in the market. ICICI Bank, that's been holding up very strong. Kunal, I think after a while you're seeing such a big solid 2% kind of move on ICICI Bank, right? Because of late the leadership clearly had changed hands from ICICI Bank to HDFC Bank.
Exactly. So it's not the percentage move, it's the leadership the stock is showing, devoid of other private sector banks helping the cause for ICICI Bank. So I think that's a standout sign for the stock. And what I also like the charts is that the stock is now ending or coming to an end of a 1.5 hour of consolidation. So it's almost like a 50-60 point of consolidation from 1060-65 levels as a support and 1115, 1120 as a resistance for the stock. And this I think could probably be one of the key factors which probably also propel the Bank Nifty higher. So we've already seen Bank Nifty, the likes of HDFC Bank coming back towards a breakout mode, very close to a 1-day moving average breakout. And I think if ICICI also manages to come into this kind of a breakout mode, we could see both HDFC Bank as well as ICICI Bank helping the cause for the Bank Nifty. So I would be bullish on ICICI Bank at current levels, and specifically at a breakout above 11 mark, would look out for at least a 60-pointer target for the stock on the upside.
Okay, so that's a view on ICICI Bank, the sole soldier right now in the trading session with the highest amount of contribution on the upside. But what's putting pressure right now? Reliance Industries. You also have L&T and TCS coming under pressure. Rudramurthy, wanted your sense on the charts of Reliance as well as TCS. If we can discuss a couple of those names, or if would you be able to help us with that, Rudramurthy?
Just now, as I discussed Reliance Industry, I will use this dip as an opportunity to buy. Levels closer to 2,900 offers a good risk reward, and I'll be looking at targets of around 2,980 to 3,000 to come initially. And once it closes above levels of around 3,020, fresh momentum can be seen in Reliance. And if I have to also look at the charts of HDFC Bank, ICICI, Axis, all this, it tells to me that private banks will lead the rally and Bank Nifty is headed towards 50,000. So I am bullish on market and I will use this as a buying opportunity. A quick word on technology as such. I see the consolidation happening in Tech Mahindra, Wipro, and even in TCS as a good opportunity to buy right now. If you see the strong long-term support region, Wipro at around 470, Tech Mahindra at around 1,230, and even TCS at current levels of closer to 3930 is a very, very strong support. So risk reward is very, very positive. I am very bullish on IT. So the next rally in market will be led by private banks and IT, and in IT, Tech Mahindra, TCS and Wipro will be my top bets.
Let me take a out of that what you're saying. Would you concur, Shabani, that the risk reward is quite favorable for IT right now?
So IT is in a pretty interesting spot, if you ask me, especially on the large cap side. Mid cap, one may debate about valuations. If you just take a step back and see what's happened in the sector over the last year and a half, macro instability, high interest rates has meant that there has been significant amount of deferment, especially where discretionary IT spend has concerned, while companies have focused specifically on cost takeout deals. So while deal wins have come through, the discretionary segment in terms of the deal wins have been absent. What we believe going forward, two aspects to it. From a tactical perspective, as and when the rate cut cycle possibly starts and you start seeing some amount of macro stability over the next, say, 12-month period, some of this discretionary spends which were deferred should start to come back. And therefore, that adds to some element of growth over the next 12-18-month period. Structurally, we believe that also the sector is going through a sort of again a transformation. What we saw in the past, where when digital came through or when cloud was adopted. Similarly, on the AI, a lot of activity is happening. Companies are clearly exploring ways to use AI to improve productivity, and therefore overall processes will likely change again over the next few years or in the medium term. And that also was a structural run for growth where IT is concerned. If you look at the way the sector has behaved, clearly mid caps, given their growth differential and higher growth, have actually outperformed large caps. However, we do believe that from a valuation risk reward perspective, the large caps are fairly well placed at this point in time. And therefore, at this point, from a sectoral perspective, we would be preferring large caps over mid caps. Within the mid cap space in the IT sector, there would be select names where again growth has been strong and is likely to remain strong. And those are the names that we would evaluate in our portfolio.
In fact, Bank of America has also upgraded NFI now to a buy, and they've upped the target price to 17.85 already, making an early case for a calendar 25 demand recovery for NFI. But that said, the hot sector continues to be real estate, be it Godrej Properties or in Realty, or for that matter, Macrotech Developers, which also came by its Q4 update. It's all been extremely strong. What is your sense on the charts, Kunal, for any of these real names? Because, I mean, each time the good news is backed by extremely good moves for a sector which is already in a strong bull market.
Yeah, it's into a ferocious kind of a bull market. When we look at this over the last 2 or 3 years, the Anant Raj, they were the first ones to move up higher, and then the likes of Godrej Properties managed to end its, I think 2 or 3 years of correction, by almost a margin of more than 50%, from 2021-22 high. Till at point when the stock was, I think, at 1,000 or 1,100 points. Now, currently, I would believe that there are few emerging names which are looking quite strong for a breakout. This could be actually a multi-month, multi-year breakout for many of these real estate names, the likes of Godrej Properties. I think over the last 1 week has shown aggressive kind of momentum. The stock has come back towards a life high for itself, about 2,600 plus mark. So maybe on a slight bit of corrections, say at 2,600 levels, breakout zone, that stock could be considered as a very good buy. Then from the mid-cap end of the real estate pack, I think the likes of Prestige as well as Sobha, they are the ones which are heading back towards a V-shaped recovery. They are also the ones which are looking attractive. Kolte Patil, I think, has crossed back about the 500 mark, and that stock which has done reasonably well over the last 4-5 years. More consistent, and less amount of volatility is what we've seen for the stock. So I think these are the names which I'll be betting on.
Okay, since we're talking about the real estate pack, my colleague Prakash was also picking up some exclusive details as to how the housing sector is something that might be in focus come the new new formation of the government perhaps after the June month, and the first 100-day agenda has already been set. Let's take it across to Prakash to get a sense as to what would be the priority areas of the new government if they do come back to power after the Lok Sabha elections.
Yes, we are expecting some big development under the new government as far as housing sector is concerned. As we are hearing from our sources, Housing Ministry has prepared its list of priority the initial days of the new government. Sources are informing that the implementation of Amitabh Kant Committee report on stalled housing projects is likely to be on top of the agenda of the new government. We are given to understand that these recommendations are going to be very crucial in order to resolve stalled projects in the housing sector. Therefore, Housing Ministry has set a target in consultation with the Finance Ministry. However, some provisions are implemented by some of the state government, but that is not enough to resolve this issue without implementing full report in a holistic manner. Therefore, Housing Ministry has set a target. If you look at these recommendations, Amitabh Kant Committee has made several recommendations that include classifying stalled housing projects under priority financing. Along with that, policy related to minimum internal rate of return is one of them, including providing some one-time relaxation to the home buyers who are stuck in those stalled housing projects. Moving ahead, we are also given to understand that the implementation of a new home loan scheme for urban poor is likely to be on top of the agenda of the new government as well, as this scheme has already been announced by the Finance Minister in the interim budget. Therefore, Housing Ministry has set a target to implement this scheme in first initial days of the new government. As you are aware, and we have also been informed by our sources that as per the initial proposal, overall size of the scheme is likely to be rupees 60,000 crore, and home buyers would get benefit of interest subvention in a range of 3 to 6%.
Right. Shibani, your thoughts on the realty sector in a decadal bull run coming out of a decadal low, and it seems the story is not quite done.
Absolutely. So the sector has seen significant structural changes, which has obviously driven some of the moves that we have seen. One clear factor or one clear trend that has emerged is that with the kind of changes that we have seen from a policy perspective, clearly the organized space has gained market share, and that is reflecting in terms of the numbers that you're seeing, specifically where some of the listed players are concerned. And that is something that we believe will continue at least in the near term. The other debate and the point of debate that is there is of course the valuations, given the fact that there has been this sharp run up. The other way to possibly play the sector and the theme of housing is to look at the entire home building space and cement. Cement has been a sector where we have been positive. Cement derives a significant amount of its demand from the real estate space, as the rest of it coming from the infra segment. While in the near term, there is again debate on price. We believe that volume growth should remain strong going forward as well. And therefore, cement is one of the ways that serve as a proxy to the entire real estate space. The other segments to look at will be the building segments. Of course, there is some degree of margin headwind at this point in time, but what we believe is that overall, if you look at home building space, the growth comes with a lag, and therefore, as real estate sales remain strong, with a lag, you should see that play through in terms of volume growth, specifically for the home building segments as well. And therefore, again, a proxy to the real estate space would be the entire home building segment as well, where we continue to remain positive.
Okay, point taken. So that's a view coming in as far as the entire housing sector is concerned. But Shibani, this year it seems like the summer is going to be scorching. We are already seeing the initial signs of it. And the season or the monsoon is expected to be normal, but it will probably start a little later. That's a conversation we had with the SkyMet management, and we have been speaking with the managements of Blue Star, Vijay Sales, etc., who are talking about how the sales of AC and other products have gone up, and we have seen the number come in from Volta as well. Do you think this is a theme that investors should be looking at playing, or this is something which is very difficult to time?
Yeah, so I think, as you rightly pointed out, especially from a summer perspective, there's likely to be a hotter summer. So something that we need to brace for, and that is possibly also showing through in terms of numbers where some of the AC segment is concerned. The consumer durables pack per se has seen significant headwinds where there has been slowdown, specifically because to some extent the slowdown that you've seen on the consumption side where mass consumption is concerned. I think the fact remains that a lot depends on now how the monsoon pans out. If the early signs, as you were rightly mentioning, state that monsoon will be positive or will be normal this year, we would possibly see some improvement where rural income is concerned. And I think that is important to get consumption back on trend. What we believe is that if the Kharif sowing is normal and you start seeing a fairly good Kharif output towards the second half of the year, that will help in terms of supporting the rural income. Inflation is under control, and therefore, from a real rural wage perspective, that bodes well. So this is something that we will watch out for, where the entire consumption story goes. But as we were discussing earlier, mass consumption has clearly been lagging the premium end, and therefore monsoons play a very important role in getting the rural income trajectory back on track.
Absolutely, and that's exactly what we questioned SkyMet's GP Sharma as well about the prediction for the monsoon, which he believes is going to be normal this year, and also it's going to uplift rural demand. We also spoke with Blue Star about what they're anticipating already for the summer demand. Here are their opinion.
Good monsoon, I will say, most parts of the country. The start of the monsoon, we expect possibly maybe a little jerky, maybe a little aberrated. Why? Because Allah is still there. It is not vanished. It is still not refusing to collapse. Or keeping that in mind, the ANSO condition, that is the neutral conditions, it will gradually and slowly will take place around that time in the month of June. So therefore, the arrival of the monsoon, the onset of the monsoon, the initial thing of maybe a little, not as we normally desire, the monsoon should arrive with a bang. That's what we expect. The summer will go on as usual.
India is the fastest growing market. So today household penetration should be 8% based on a single air conditioner use. But unlike, the washing machine or refrigerator, which will be one per home, ACs can be multiple per home. And therefore, the market is expected to more than double by 2030. And perhaps that landmark year for India, 2047, we should surpass China's market, which is close to around 985 million. Now India is only 11 million.
Okay.
And 11 million to 80 million is the growth trajectory that is visible.
Okay. So we are interacting at a time when you have came up with some new products in the room AC segment, and also you're targeting to achieve a 15% of market share by FY25. Can you share some insights on the same? The new
So
products
we are somewhere close to 14% market share, and you know when you say all India market share, there will be pockets where you will be having 20% share, pockets where it is 15, pockets where we are. So it is a average market share is close to 14.
Well, our sources are telling us, as you can see on your screens, that the government may be looking to divert more ethanol or more of sugar for ethanol production. You can see some of the sugar stocks as well react to that. We'll get you more details on that story right now for the production of ethanol. You can see a big spike come in on most of these names. But Swiggy, that's been the topic of discussion, the valuations that have already been marked up once again for the third straight time ahead of its planned IPO this year itself. It will now be valued at a staggering $12.7 billion, which is still lower than tomorrow's $23 billion. Let me take it across to Sharad and get in more details on the same.
Well, a very interesting development coming for Swiggy. Invesco has actually increased its valuation, and this is coming for the third straight time. Now the valuation currently stands at $12.7 billion. Now the initial funding where Invesco had come in, that number was $10.7 billion. So it's important that this is a third straight markup happening. And of course, last month itself, Baron Capital also increased the valuation when it comes to Swiggy, and that has also gone up a fourth consecutive hike of $12.1 billion. Now, if you look at it, there was a markdowns coming across until May 2020, but after that, there has been a steady pickup going ahead. Also, apart from the valuation, the IPO, the much awaited IPO of Swiggy is in focus. It's expected to come in by the second half of this calendar year itself. It's expected to be a size of $1 billion, and importantly, the metrics that has actually improved, especially the operational metrics such as the higher delivery charges, and that has actually changed the outlook as well. Now, of course, listed peer Zomato would be in focus, and currently, of course, Zomato has been on a run and it's nearing the 200 mark as well, and roughly valued at $23 billion, while Swiggy's valuation currently stands at $13 billion. Now, Street is expecting a couple of more markups might be there for Swiggy going ahead for the next 3 to 4 months. Also, if you look at the duopoly itself, overall in the market share in the food delivery segment, Zomato is still having 54% stake, while the remaining stake goes to Swiggy as well. But interestingly, the quick service area is also something where even Zepto is catching up. So that is something which we'll be watching out for. But yes, the competition between Swiggy as well as Zomato has heated up when it comes to the valuation wars.
The latest on Swiggy and how the valuations have actually finally perked up a bit. But as we were highlighting, it's the sugar stocks are actually doing quite well, whether it's a Sri Renuka Sugar or EID Paddy as well. Let's take it across to chartists to get a sense as to how the charts are looking for this one. Rudramurthy, if you're with us, could you help us spot which is the strongest chart within the entire sugar pack?
Yeah, for me, EID Pari definitely looks good. Fundamentally, also the stock is good. 580 holds a very, very crucial support for the very short term. So at current market price, I will definitely be a buyer in EID Pari, looking at targets of around 640, and I will just keep a stop loss slightly below the support area at around 580, which can be at around 570. And if I have to even see charts of Balrampur Chini, that also looks good for me after having made a strong base formation at levels closer to that 350, 360 zone. Now stock is making an attempt to move beyond 395. So once it crosses this level of 395, yes, it can move towards 415, 420 zone. I will avoid Renuka Sugar, but for sure, if I want to buy a fundamental strong stock as well as what is good on chart, I would prefer EID Parry and then Balrampur Chini.
That's the take coming in on some of the sugar names. That's looking good. Let's welcome on board Nishant Maheshwari as well and talk about what he's making of the market right now. Nishant, hi, afternoon. Your thoughts on the markets has been going good. Seems like some consolidation could be well on the cards.
Thank you. Thank you for having me. Good afternoon to all your viewers. Yes, I think post the recent RBI announcement, basically, where there was indication that the policy continues and at least there's no rate cuts on the horizon. I think market has been pretty steady, seems to be consolidating around the current range, and we continue to see, I think the next triggers would be the current quarter results and monsoons possibly.
Okay, so that's a take coming in. But in the meantime, taking a look at what's buzzing around in the trading session, I think it continues to be metals all the way, which are doing quite well. And you also have, of course, the real estate names and IT as well, which is holding up quite comfortably. And then select names, Century Textile, like a Soba Developers. These are the ones that stand out apart from the private banking names. But Nishal, what's the view on the private banking section? If you had to make a bet on the top pick there, what would it be? Would it be ICICI Bank, Axis, or the good old HDFC Bank?
So private sector banks has been our favorite for some time now. We had preferred the SFBs previously, but I think the larger banks have corrected quite a bit. And that's why we prefer the large cap banks now. But our order of preference there is obviously HDFC Bank. Yes, I understand basically that it'll take some more time basically to sort it out in-house, but I think in the short run, I think the valuations are favoring it. So that's why we believe HDFC as our top pick. And I think a smaller bank, RBL, looks very interesting to us in the private sector space. So these are the two banks in the large and the mid-cap category, which we are looking to recommend to our clients.
Nishant, what about Paytm? Could that be a turnaround story of sorts in the making? I know it's been completely down and out, and rightly so. The news flow has been such. But what next for Paytm at 400 thereabouts?
I think at the moment it's a best avoid basically because there are a lot of other opportunities out there. Paytm needs to get its house sorted. Yes, I think the Paytm banks has now got sorted, but I think the model still remains to be a bit confusing. So where is the revenue is going to come from? How's the outlook? I think these are two situations basically which very little clarity there. So I think at these prices I would avoid because I think there are a lot of other interesting plays which are available and obviously much cheaper.
Point taken. So that's a view on Paytm. Still some time away that recovery. For now, the market is not seeing any buying on dips emerge. At the moment, we're still around the 2200, 640 mark. So from the highs, there has been a considerable downtick. And even in terms of stock-specific moves, there are some stocks which are getting a lot under pressure. Having said that, take a look at Hindustan Zinc. That stock is clearly firing away in the trading session. I think it was already up 8-9% earlier. Now, in the last few minutes, there's a further perk up, and that stock is now sitting with a gain of a good 15%. Hindustan Copper still higher by 8%, and MOIL is also up 5.5%. Kunal, within this entire pack, and especially on the charts of Hindustan Zinc, what would you recommend the investors who are already holding the stock?
So bullish on the metal pack, and I would still believe that many of these stocks have just started to show signs of a breakout. So Tata Steel, I think, has managed to break out 160 mark after, I think if I'm not wrong, 1.5 odd years of consolidation. Vedanta is an underperformer. Hindalco has done reasonably well. That's a stock which has been a lot more consistent. So I think there are a lot more better charts, metal pack, which one could be looking out for. So Tata Steel is something which I would be bullish. Sale, I think around 150 mark could be something which you can look to have a bullish trade from a medium to long term play. Hindustan Zinc, after 2 days of strong ferocious up move, 2 weeks of strong up move, I think the risk is now getting a lot more skewed because the indicators, for example, the RSI is almost at 88-90 for Hindustan Zinc at current levels, which means momentum can continue, but initiating a fresh buy could probably be at a very good kind of a risk reward.
Right. Okay, Kunal, before we let you go, let's get your BTST trades as well.
So I'll go with two buy calls. Capacity Infra is something which I recommended, I think last week, around 275, 280 levels. The stock has now crossed the 300 mark. Looks attractive. So I maintain the target of 330 on the stock. Stop loss could be traded 288. And LNG Foods is something which I've been bullish on. The stock is heading towards a breakout for the 208 plus levels. So would suggest a buy with a target of 228. Stops at 200.
Okay, Kunal, we'll let you go on that note and see you tomorrow morning at 8 a.m. Let's also get in a sense of where the volume action is in the market right now. Ansh is here with all the volume buzzers. Ansh?
Yeah, so Page Industries will be the first stock in focus. As you can see in the chart as well, the stock has given a good breakout from its downward sloping resistance trend line, which was intact since start of the year. The stock has also surpassed above 50 DMA along with good volumes of over two times its 10-session average volume. Apart from this, sectoral will also be in focus as the stock has given a breakout from its reverse head and shoulder chart pattern, touching 6-year high as well. The volume has also spiked to over 5 times its 10-session average volume of last 10 sessions. Lastly, Motilal Oswal will be in focus as the stock has actually given a breakout from its key pivot high of around 1920, touching record high as well. Also, the volume has surged to over 5 times its 10-session average volume. So keep an eye on the stocks.
Thank you so much, Ansh, for joining us with that quick price volume buzzer list. But in terms of the stock, it continues to be names like even sugar stocks actually managed to show very good gains. Sri Renuka Sugar should come up for you on the screen. Parry is doing quite well. So a couple of these sugar names, including the likes of Balrampur, Chini, etc., are seeing a massive surge on account of more usage of sugar perhaps being diverted into ethanol. And that's something which is supporting the sentiment on some of these big players of ethanol. Nishal, I'm not sure. Do you look at the sugar pack closely? If yes, how would you recommend investors to deal with it?
So yeah, we do have sugar under coverage basically, but I think it has been a disappointing year for sugar for some time. I think the last 2 quarters they have been underperformers. But recently what we are seeing is basically that the sugar production is better than expected, and that's why I think government is allowing the sugar companies to divert some amount of sugar production to ethanol. And that's why we see these better days ahead for sugar industry, for sugar companies in particular. So I think some of these companies do look good for at these prices, especially Balrampur. That has been our top pick for some time, and I think at these prices one can start accumulating the stock.
393, a good buying price for Balrampur Chini. Nishal, let's have some other stock ideas as well from you. Anything other than what we've spoken about, RBL Bank, Balrampur Chini, that's looking interesting right now at these levels?
So I think some of the smaller NBFCs, particularly I think the SFB, out of the SFB pack, they have been doing pretty well. Basically, if you look at it, the business update which they have come out with, I think spectacular results. 1 or 2 of them basically, which we have been recommending to our clients, is Suryodaya. A small SFB basically, it's done very well. Another 40% YOY growth and 16% Q-on-Q growth. So I think that is available less than one-time book. Another company which is dedicated towards SME lending, Ugro, that also I think is doing phenomenally well. Basically around 50% kind of a jump basically in the current year, and next 2 years also we believe basically that it's going to get similar kind of numbers. So there also it is available one-time book. So I think these are some of the stocks basically where these are all small caps, and one can look out as a bottoms-up kind of approach.
Kind of approach, but stocks like the sector definitely stand out. What's the view, Nish, on the big up move that we have seen on X side? And there's a classic bull versus bear case scenario when one person is talking about how this could be a complete re-rating candidate, while others say that it's a very commoditized business. It involves high capex, and that's why return ratios are always limited, and that's been the global trend as well. Do you think that the kind of up move that we have seen on the likes of X and Amara are called for?
So we don't cover it, so that's why difficult to really comment on that. But I do know, I think Exide has got a bit of checkered history history. So we used to cover it some time back, basically, as far as the R&D is concerned. So that's why not very sure, but difficult to comment at least. I am not on top of it at the moment.
Sure, no worries about it. But in terms of the other movers, you have some of the power stocks which are actually coming off. So JSW Energy was under pressure. Tata Power is a bit volatile. And in the recent run-up that we have seen, REC, PFC also haven't participated. Rudramurthy, what does the chart check tell you on the price of REC, PFC? Do you think the best is over and people should perhaps looking out whatever profits they have made already?
No, for me, PFC and REC is now offering a good buying opportunity because having seen those higher levels of around 470, 475, PFC made a profit booking thing and then corrected till levels closer to 360. Now from 360, it made a move towards 400, finding some amount of selling pressure and again now consolidating at these level. So I will be a buyer in PFC levels closer to 380, 385 and I will look at all-time highs again back on PFC which can be at around 470, 475 region. And similarly, if I see the REC chart, yes, REC also offers to me a buying opportunity on dips. These are two strong stocks, no doubt from their higher levels it has made a correction, but I will use a dip in REC to buy. Strong support zones are at around 425, 430 zone. So at current levels where we are very close to the support of 425, 430 on REC, I would rather suggest a buy on dip strategy both on REC and PFC. So REC is a buy on dip to 425 and PFC on dips to 385.
Okay, that's the or rather move coming in on some of the power financiers. Today, of course, Hindustan Copper, that's the one which is holding up very smartly, about an 8.5% move. And to be fair, it's not just Hindustan Copper. The entire metals pack has been chugging along quite nicely off late. Vedanta as well is up about almost 4% as we speak right now. JSW Steel holding up. The Tata Steel as well, although they've come off quite considerably from the day highs, but in the green nonetheless. Nishal, would you have a view on the metal sector right now and whether there are any investment opportunities here?
So I think metals last quarter has been, I think, a bit of a issue because you have one side the raw material costs going up and the other side the prices not reacting to favorably. So I think this quarter results are going to be a bit of a challenge for the whole metal pack, especially ferrous. We believe there is going to be contraction of margins. Going ahead, I think there is some hope as far as China is concerned. And that's why I think we are seeing some run up in the metals. I would be cautious at these prices, rather actually take profits because we still continue to see strong China dumping happening. And that's why the domestic players have not been able to take price hikes. So I think a good time to take profit in the metal pack.
So the recommendation is book profits in select metal names. But separately, in terms of the stock-specific moves right now, well, good amount of momentum can be seen on Anand Wealth. Motilal Oswal was, of course, doing well as well, 12% higher. And in Castrol India, Century Textiles, Vedanta as well as actually pulling up. So some of these names deserve mention. But Nishal, I would want your view on the FMCG pack as well. But before that, let me take it across to the experts whom we spoke with earlier as to whether there are genuine signs of a recovery in rural demand as of now, or is it still very limited to urban consumption? Take a listen.
We do expect growth to be in the low to mid single digits in the first half of the year. Even though there are some tailwinds with regard to a good Rabi crop, etc., but overall the demand situation remains muted. My concern going forward is not so much on the top line, but on the margins.
An early summer that has come in, I think, is definitely positive for a lot of categories. However, there is definitely a headwind from a confectionery and chocolate space where cocoa prices have soared. Most other discretionary products, we are seeing an active participation of brands in trying to even correct prices so that they drive consumption. So I think rural, don't write off rural anywhere. I think it's just a season away from getting back into action.
Rural recovery is still awaited. My sense is in FY25, with a normal monsoon forecast and local players competition getting anniversarized, I would that rural recovery can potentially start from Q2 FY25 because of the gross margin pressure coming back. Consumer companies will take a price hike. We have already seen in cocoa and coffee, a lot of players thinking of price hike. They have already taken. So that will also aid the overall revenue recovery.
Nishal, wanted to understand what you make of whether or not FMCG, not urban, but the rural demand could see the recovery. We were just chatting with SkyMed today and they're pretty hopeful of a normal monsoon and that they think is going to aid the rural recovery coming in bits and starts. One has seen a GCPL, Marico as well, post recent Q4 numbers and hints of rural recovery clearly in there. But would you say it's time to invest just yet?
I would actually want to wait and see that there is strong rural recovery happening. Our recent channel checks, we do it every quarter. And this we specifically did only for the North India because I think North India is where most of the FMCG companies have highlighted that the demand is a bit more poorer than the other regions. And it doesn't seem to be indicating any strong recovery happening in the rural side. And the one reason which has been cited very strongly is high inflation in the rural areas. And I think that's eating into the rural recovery. So I would wait for this inflation number to actually come down more on a more sustained basis before actually going out and investing into the rural focused stock. Yes, current quarter numbers would be better because I think the companies are taking price hikes. So their margins may go up, but I don't see a volume improvement happening.
On FMCG and consumption. Just 2 minutes left for the trading session to end. So on that note, Nishal, we let you go. But Rudra, before we bid you goodbye, tell us your BTSC pick.
Concor is a buy. It has a strong support at levels of 910 zone. So looking for target of 940 to 950 with a stop loss of 0.5. Wipro also looks very strong. Buy at current market price. Look at targets of 500 with a stop loss of 465. And PEL is a positional buy at current level, offering a great risk reward.
Right. Okay. That's the take coming in on the BTST trades. Rudra, we'll let you go on that note. Just scanning through what the market is shutting shop at. While it may be a flat close, but a lot has really transpired from the start to the finish. At one point in time, remember, we were down a good 150 points off today's peak on the Nifty. While we started off at the 22,750 print, we're closing in a good 100 points off from there. 2264 thereabouts is where we're shutting shop for the day. Metals, of course, has been pictorially the strongest of the lot, with Hindustan Copper, Vedanta really leading back. ICICI Bank has had some major contribution to today's index move, with a 2% move coming in. Hindalco as well added to that metal pack. And then, of course, there's been an Eicher Motors. In many cases, been in a very, very strong trend. And today, some of those names, like an Eicher at least, have managed to continue to hold through, as has been the case with M&M2, which is now well above that 2,000 rupees per share mark. Axis Bank, very mild out there. And of course, the leaders from the past two trading sessions, that's both Reliance as well as L&T, they took a bit of a breather today.
Yeah, so from metals like the Hindustan Zinc, Hindustan Copper that we flagged out already, you had Light Tech reacting to that QIP news, so 10% higher. Shilpa Medicare was the other one which was reacting to that news. Excite continued to have a good run. Of course, not the kind of rally that we saw yesterday, but still holding out quite well. Godrej Properties, Ajmera Realty, Sobha, they were all reacting to the strong Q4 sales. Infosys was in focus on account of that Bank of America upgrade that came by. There was Premier Explosives as well that ended with a gain of almost 16-17% as the company is considering a stock split. Nuvama, wherein Jefferies initiated coverage, and Canfin Home, where Morgan Stanley expects a good Q4 to come by. So those were some of the stocks that really held out, but the advanced decline ratio was clearly favoring the declines. Midcap index, meaningfully off the highest point of the trading session, and the key indices ending in the red today. That's all we have on this edition of Closing Trades. The entire team who put the show together, thank you so much for tuning in.